Good morning, everybody, and this is your DAX day trade setups for today. So another leg down, first a swing up and then a leg down. For me, this is still sort of in that flag setup that we were talking about yesterday. Bit of a messy one, but anyway, it doesn't matter which way you draw it. It is a consolidation. We have come back down onto this previous swing high a couple of times now, and again the buyer is still digging in this zone. Oscillators eased off quite nicely. Diversion still in play with the one oscillator, as you can see, the other oscillator not so much. So I'm not convinced this is a move to the downside just yet. I still think it is a consolidation, and that's just the way I will still be treating this. A trend is too strong to the upside. This is a massive trend for it to be taken out. I think this is just 2 weeks of consolidation or confusion, whichever way you want to look at it. But basically, if you just look at the logic behind it, there are fewer buyers in the market than there were 2 weeks ago. So there are still people holding. There have been a couple of people taking profit, but nobody's really selling off. Okay, now look at the moving averages here on the 3 hour. They have crossed over. We're stuck in between the 150 EMA and the faster moving averages, so that does indicate that we are ranging. We have a fairly strong zone of support here. This is the previous highs at 18,600 or 18,594, and you can see the buyers did come in there yesterday. So this is still sideways for me. There's no clear signal that it's going to fall, and there's no real clear signal that it's going to climb. Now yesterday, as you can see, consolidation during the European session, then the US session, bit of data that came out, big down, big up, big down, big confusion still. So I'm very, very, very skeptical of this right now. You've got the diagonal support, you've got the horizontal support, and we're sitting in here. I definitely don't want to be going short at this area. Now, if we do get to the 15 minutes, sorry, not the 6:15, you will see there is a zone of potential resistance up here. But again, that puts us back above the moving averages and in between the 150 and the faster moving averages. So I'm kind of reluctant to be taking a short there as well. And if you look at price action here, big engulfing bar, then a massive pin bar, and all of that after hours. So you might as well just take that with a pinch of salt. And then you've got this horizontal support, which was a previous swing low here, and that swing low was that was also, would that been in hours? So that would have been after the DAX closed, and this was on the 22nd of May, and so the actual DAX close would have been up in this zone over here. So I suspect this is your kind of line in the sand, which is 18,650. 18,640. Get back above it, build a base there. You'll be looking for a move to the upside. The reason why I'm not even sounding bearish, that was the original trend line. We're not even holding that. We're back above the moving averages on the 15-minute here, or in the moving averages, I'd rather say. So I'm not convinced that this is a move to the downside. This just smells of a little bit of a trap. So a lot of retail traders are going to be starting to use multiple different strategies to look for opportunities to be short. They're going to look for a reason to be short. And when I zoom out, I can just see the multiple times that I've been burnt by looking for a move against the bigger trend, because I think, well, I'm greedy and I think I'm going to get this move and I'm going to make a lot of money because it's going to fall all the way down here. That's definitely very rarely the case. So this is more a case of strong move up, no value left up here to buy looking for value lower down. There are a few areas all the way down. As you can see, each one of these fractals would offer value, but I don't see a reason that we're going to get to any of these right now. So I'm very, very skeptical about taking that short at the moment. There's probably been a lot of people that have been taking some short scalps and making good money, but if you look at this on the hour, above the moving averages, below, above, below, above, below. So yeah, there is a little bit of an opportunity here for rejection, but I think you're probably going to be held up again by 18,600, 18,650, somewhere around here, because that seems to be a strong area of, well, it is a previous high, all-time high, it's a previous weekly high, monthly high, etc. So it's going to be a strong zone of support. So for me, I am going to be staying out of the markets. It will be second week in a row that I'm out the market. First week was just because I was traveling, but this week we haven't really put a trade in. I think I put one trade in this whole week. I made a very small profit. So that's kind of me today. I think we'll wait for Monday to see what's happening. I'm not entirely convinced which way we're going to go. You know, if you're going to sit and watch the charts, you could find a rejection here. But again, you're going to be above the moving averages. So it's not, you want the moving averages pointing straight down. Find the rejection, get in short, and it just gives you a bit more confidence. But when price is above and below moving averages like this on the 15 minute as well, that just indicates that there's confusion. And it's a wide zone of confusion. It's that 160 point zone of confusion. But I'm not going to get suckered into trying to second guess it right now. I don't think it would be the wise decision at all. Okay, so I'm out of the market. I'll be sitting on the sides. Hope it helps you somewhat, and enjoy your weekend. We'll catch up with you on Monday morning. Cheers for now.